If you are in the Chicagoland, Northwest Indiana area and need tech support with computers, security cameras, wireless networks, computer repair, and much more, please book a service appointment now at ASCS Technical Services at ascsts.com. If you're wanting more out of life and want to be more healthy, please check out owlsherbs.com because your health is your wealth. Also, check out thebroke.geniuses.com to stay in the know, purchase some t-shirts as well as other merchandise at brokegeniuses.com.
What's going on? What's going on? This is the Broke Genius. This is Market Mondays. We're going to take a dive into oil, big oil. So basically, we're going to look at what is going on with oil. I mean, you know, the picture that you see in the avatar of the video, the thumbnail of the video, if you probably are a zennial or even a what generation, or I guess, yeah, millennial, young millennial. You probably don't know what that picture is, but that is the Beverly Hillbillies. Okay. So basically, it's been a rough ride for oil. Okay. I'm gonna look at some historical charts, and then I'm gonna look at some articles, see what the heck is going on with oil. What in the heck is going on? People still driving their cars. I mean, I got to get some gas next time I even hop in my car. I have to go get some gas. Somebody's making some money, but I mean, who? Like, because obviously oil is definitely down as far as the markets for the most part. So we gonna take a look at it and see what is actually going on with oil. Because I thought by this time, I mean, I'd already be, up about $400 or $500. Because I was basically thinking, hopefully oil would bounce back, but we gonna look at it and see what's going on. All right. So that being said, we're gonna see what is going on. Let me share my screen. Take a look at this. First, read the article to see what's going on. As far as this article is early this month, about you know October 2nd, so that's the first week of October. Says oil prices likely to continue to struggle in the fourth quarters as demand lag. So basically, it's a demand lag. Okay, so hmm, why is it a demand lag? Let's look into this. So we got key points here. Oil prices are expected to rise just a few dollars per barrel in the fourth quarter, and OPEC and its partners may have no alternative but to extend deep production cuts to support the market. So, if you don't know what OPEC is, you probably need to you're not reading enough because, OPEC is a major group of countries and all kind of stuff. So the fall off in air travel and warm winter may keep pressure on disti- distillate distillate fuels and important sources of oil demand. The oil market is taking COVID the hardest of all asset classes out there, said one analyst. Well, I gotta stop the I gotta stop the presses on that because I've talked about different asset classes and I've talked about REITs. Matter of fact, I think one of my first Market Mondays, I was talking actually about REITs, or the first or second Market Monday that I actually, because I just recently started this, I actually talked about REITs, and REITs are getting hit really, really hard. But I don't know if it's getting hit harder than oil, but we'll look at that. We'll look at that when we get to it. So I'm gonna finish reading this article and see what's going on here. Oil prices are expected to rise just slightly in the final quarter of the year, held back from further gains by deep chill and global travel and a still healing economy. Analysts forecast the prices of Brent and West Texas Intermediate should rise to mid 40 dollars per barrel. So let's see what they talking about. So this is Brent crude. This is the chart for Brent crude here. We're gonna open that up. We're gonna get to that. Then this is West Texas Intermediate. Okay. We go look at that as well. Hopefully that loads up. I don't Okay, yeah, it's loading. Okay. So huh. So basically they're saying it should go to $40 a barrel, but they say it's risking that it might drop below that. So if you just, didn't follow anything about oil or the news during the pandemic, basically oil was trading below the cost of it actually being any way, shape, form of basically it was trading below profit. So it literally had oil container ships just sitting in the dock, just waiting on the go ahead to offload because it was literally like the oil markets was just crashing. People were losing their entire generation's college fund and all kind of stuff because oil just literally crashed to the point where it was not even trading um, in a positive. It was literally where it was worth less than what it could possibly be sold for. But yeah, even when the crisis happened, the oil prices only dipped in the dollar mark in the in the Chicagoland area. It didn't go back to like high school prices because when I was in high school, oil back in the late 90s, I'll just say the late 90s. The oil price you can go to Indiana, which about where I lived was about 15 minutes away, and you can get a gallon of gas for about 99 cents. Sometimes it'll be even less than that. So, now, I mean, the only time it ever went where it dipped that low again was the market crash. After the market crash, 2008, and then it kind of things settled off around around 2009. It started going down. But I'm gonna look at the charts. This is one right here. This is a picture, I guess, of WTI crude. So we gonna look at that too. So we gonna look at the WTI because I definitely follow that too. Okay, so got crude prices right here. So crude is pretty much a commodity. I mean, it goes into commodities and stuff. But I wanna actually be able to, because this one I see it only goes to like 1 year. I want to look at this from another perspective. If it goes further, I want to look at it at least. I want to look at it actually. In this case, I want to look at it in as long as I can. So it goes, I guess, yeah, January 2010. All right. Okay, so here we got Brent crude. Did it ever load up? Let me see here. Let's refresh this. Refresh this. Oh, okay. Let's close that. Maybe it's not. Let's see what this does. Well, while that's loading, we're gonna look at WTI. So WTI was already here, so I lost track of that. But anyway, this goes back to 2016. So you see the drop at around April 12th, 2020. It dropped as low as, let's see how low it went. It closed at $16.94. That was April 12th, 2010. Then it shot up. So if you would have bought in at that drop, you would at least double your money. But then now it's just kind of like, it went up a little bit, then it dragged down at $37, and then went up a little bit. It's kind of holding a little bit here. As of now, it's like $40. But the high, the all-time high from 2016, because it's only going back. Well, let me try to click this all button here, see what happens. Okay, so it's going back as far as 82. Okay, so the peak, the peak here, and this makes sense. This is when gas was like in the Chicagoland area was $5. Okay, so this is like $140. Okay, it closed at $140 March of 2008. So that was like probably that was the record for WTI crude, and then it dropped Hard drop took a death drop at $44.60, and this is September 2008. This was market crash territory, the housing collapse, the Great Recession. So peaks and valleys, and then it's another big drop off. 2015, September 2015. Okay, and and just periodic drops, but it dropped 12. Its biggest drop is December 2019. Since, I mean, as of late, this is the latest drop. December, you pretty much say Christmas time, 2019. So following this chart, and then also I have to say basically that I am not a financial expert, trader, professional trader. I have no fiduciary responsibilities towards anyone. If you are expecting to get trading advice, please consult a stockbroker, someone that has a stockbroker's license and that is binded by fiduciary responsibilities. And my strong opinion, do not trade any stocks with money that you need right now for cost of living expenses, such as your rent, mortgage, car payments, credit card bills, debt payments, anything of such, because that is what I call scared money. Do not trade with scared money. And please do your own due diligence. And I will be recording that because I ain't got time to keep saying that over and over and over again. So we gonna take care of that. But as we proceed, all right. So yeah, so the latest drop, like I said, is December of 2019. So went up again, you know, as of recent, it's at about $39 today. Okay, so the drop from basically going, it was at $20 in 2019, Christmas time, 2019. Then it doubled its money a year, almost a year later. Okay, so in my opinion, okay, in my opinion, something is going on, but this is, to me, it kind of looks like it's a normal cycle. I mean, it looks like it's just kind of normal. Like pretty much, if you got staying power and you able to take some stop loss in, you definitely want to put in a stop loss. When you if basically, if anything, just manage your risk. But in theory, from just looking at this chart, it dips and then it goes up. Then it dips and then it goes up again. So, basically, if you can, basically hold on for the dips and then, basically play the Tootsie Roll song, cotton candy sweet as gold, let me see you Tootsie Roll. Like, I mean, basically, if you can hold on and then try to see if it either goes down and then spikes back up, because it seems like this is what this does. But just looking at it from a historical perspective, this dip here, this big spike here, this was market related. This is a black swan event, mortgage collapse right here. This spike here, what happened 2011 or 2010? Something happened. I guess something was related to that. Maybe cash for clunkers or something like that. A lot of people bought a lot of cars. Something happened here. Let's see, 2014. Eh, you know, can't really say what's what with that, but if you follow the news, and it'll show you what happened in these market events, why it went up and why it basically went down. I mean, obviously, this is definitely a black swan event. And then you could even say, obviously, we are in a black swan event right now with COVID-19 pandemic. So you can say pretty much right here is a black swan event right here about, right here. This is when it made national news. Basically, it started drumming up, basically the pandemic was in full, hysteria mode, March 2020. So is it going to go up or is it going to go down? My opinion is going to go up. That's my opinion. Now, it's my opinion because, I mean, just looking at this chart, I have to say it's going to go up. But, I mean, that's my opinion. Now, I may be wrong, but you can see it dips and then it goes back up. So what I said to my own brain, in my own brain, as far as my thoughts, I was like, if you could just basically buy a whole bunch of oil and hold it, because see, a lot of times, and this is where scared money comes into the to effect. Because I mean, some people's money is scarier than others. I mean, I'm definitely, like I've said before, I'm kind of training myself to be more of a buy and hold type of person because a lot of times that's what happens. You start getting emotional with it and panicking, you know, like a uh like a wife that starts to worry and then just immediately goes and files divorce because her husband didn't come home uh in time enough to for her dinner to be done that she cooked because he went to go get errands, but he just his cell phone died and he had a flat tire. So she just go call her divorce lawyer because she just thought the worst and just was 100% emotional. Well, a lot of times people make decisions like that off of even, stock market um decisions or, stock trading decisions. If you are able to kind of hold and steady, let's say it does go up and you just, buy like a freaking like your pants is on fire, then guess what? I mean, the outcome is you've made a decent return from that. Now, if it goes down, don't come to my channel talking about you this and this and this. This is what my opinion is. That's why I say you should, reach out to someone else. You got people that are oil experts, definitely in the know. You got people that actually spend got billions of dollars in shares of oil companies, um, such as Warren Buffett, different other investors got way more money than I got, and actually will be considered as experts. I mean, you got a lot of people, man, that could talk about oil. Now, from the news stories that I saw, a lot of people are quiet. I don't really see too many news stories. They're trying to talk about the oil and politics, and it's like I'm not about to go there. You know what I'm saying? So, but people kind of quiet about oil. I don't really hear too many people talking about it. But when it's stuff like that, while people's quiet, that's when you gotta try to talk because it's something ain't right. Something strange in the neighborhood, and it's like basically who you gonna call. You know. So with this oil price, there is companies that pretty much they're down. They're like fire sales, but what's gonna happen? Now I did see some spikes. So And I'll talk about one company that I pretty much watch. I don't know why I watch it, but I always watch it. But let's go into this group of oil, or let's just say energy stocks. And we're just gonna go with just basically oil and gas drilling. Okay. So this is like a couple companies that basically are in the oil and gas business, gonna set the price as far as from low to high. We're gonna look at it. This company, I've never heard of it. This is called Pacific Drilling. This is on the NYSE, so it's New York Stock Exchange. It's trading at 24 cents a quarter. Uh, yeah, I remember my great grandmother. I cut the grass. It's about 14. She gave me 2 quarters. I didn't complain. I just cut the grass. I just, just thought it was humorous, but the woman was born in the early 1900s. Quarter was like you were rich if you had a quarter back then. But anyway, uh, it pretty much was at, let's see, $4.50 February of 2000 and no, this is February of this year. It was $4.50. So right now it's 24 cent. So the question is, are they gonna just have to stop drilling? It's a whole bunch of news articles, and I'm on finviz.com, and they got a whole bunch of news stories with this. You know, got stock twits, which people talking about, different stocks. I mean, the reason I've been looking at oil is because, I look at I'm doing the Robin Hood challenge, and I'm I'm trying to find something that I can just, knock it out the park. Now, the thing that you got to look at this chart is this gonna, if you turn this around, it basically would be like, or let's just say you flip it. Is it gonna actually, if you turn this, if you were able to 3D wise turn this chart to the right, is it gonna go actually up if you inverse this chart? Or is it just gonna just like, okay, is this company, because when a lot of times when companies do go to where they're like penny stocks, that's like they're really in trouble. Okay. I mean, as you can see, all of these red negatives, it's a lot going on here, and it's not good. But what will it take for this company to go back up? Basically, a high demand. The question is, when is there going to be a high demand, or is there ever going to be again a high demand? And I mean, I think it will be, because I mean, here's the thing. There's a few variables. The one of the variables is there's an electric car movement that's slowly just, basically coming to the market. A lot more people are buying electric cars. Electric car manufacturing is probably, I would even say, from what I'm seeing, is getting cheaper and cost efficient, because batteries, there's new technology for batteries that's on the rise and is already on the market. And they're even making batteries, talking about million-mile batteries and stuff like that. So electric will slowly, like a snail, eat up market share for oil. Okay. And a lot of these oil guys and tycoons and everything, they know this. They probably won't talk about it. But the electric car companies are making somewhat of an impact. People might not say something because see, here's the thing. I'm gonna talk about Murphy's Law, and that's a good idea to talk about for Finance Fridays because maybe I'll talk about that. Yeah, that'll be something that I'll talk about there. But one thing about Murphy's Law is you cover everything because it might be something small that actually causes you, to have an emergency or something that just, messes up. Well, the electric car company or the electric energy could be that Murphy's Law, that little small thing that you forgot. Like, for example, that little small, bump that you made on the stove before you walked out of the house could be just enough to burn your entire house down. Just little small things. Sometimes, a lot of times in life, I didn't notice the small things or didn't pay attention to small details, small fine-tuned details, and then something happens where, wow, okay, boom, you know what I'm saying? It just pretty much I just dropped the ball. I remember crypto. Like I was in tech during the time of crypto where it was pennies on the dollar. It was like crypto was trading um like you know just basically it was damn near worthless to a lot of people. I mean, it was like something that was like, oh, okay. You got some people like this is gonna be the wave of the future, or some people like, oh, this is pretty cool. To basically, you know, people like myself, just like, whatever. Sometimes that, eh, whatever, or whatever, ends up being forever. It ends up being something that is, you know, um, something that you will regret forever. You know, and yeah, man. I mean, a lot of times that's what happens. So when you got this oil or actually electric cars, that the electric car business, the electric car um, market or asset class could be that next whatever situation that slowly but surely have people where I don't know, oil starts, oil prices will be 40 cents a gallon, 80 cents a gallon. Oil could be that I mean, electric car company could be that whatever. Like I just to this day, like a lot of times, I just I don't know, it's the arrogance, the just the doubt of just thinking that everything has to be a certain way, listening to other people. Like you hear other people be like, oh, it's this way, it's only this way, and it's no other way. Like everybody follows the hamster wheel. Well, everything doesn't always follow the hamster wheel. And hamster wheel logic doesn't always work. It's a million ways to become a millionaire. So when I hear people like, yeah, you can't do this and you got to do that, or that's this type of talk or that type of talk, or that's, stupid stuff. I mean, just think of just Tesla, for example. Not Tesla, the car company. Tesla, the actual Nikolai Tesla. He was looked at as a freaking crazed, lunatic, psycho idiot. Okay. Died very, very poor. And then people took his information and ran with it. And the rest is already history. I ain't gonna go into all of that. But I say all of that to say, you know, a lot of times I do that same thing. I just, just discount things or discount information. And just as much as I'm discounted, people discount what I say all the time. I mean, I have a lot of subscribers, but for just a person that really you know hasn't really done that much to get it, because it's a lot of people I would say is doing a lot more stuff than I am, a lot more social, a lot more engaging than I am, but I got quite a few subscribers now. It got a it is somewhat powerful. It's not to be diminished, but it's not like that I don't really get that much engagement. Okay, that's where that's where the difference is. It does not matter as far as the subs. It's the engagement. That's what makes it where it's significant. But all that aside, I've diminished a lot of things that's come up. Cryptos is definitely one of the biggest, I would say, primarily Bitcoin. You could even say, what's the other one? The other big one was that Ethereum or something like that. I remember when I was just starting out, starting a job. I was working for a candy manufacturing company, and the stock went from like I think it was like 50 cent. Let me look at my Robinhood, because this one, I mean, it literally, it was like no reason. I mean, I did just start a job, and I definitely was not well funded before I started the job. But it was just one of those. It was another one of those, eh, whatever moments. And then to make it so bad, I'm gonna tell you what's even worse. I went and bought a car and got a subprime loan for about, it was 3 years, no, 4 years. Yeah. And I put down like $500, had to get insurance. Um, and then I think I had to pay like another $500 at the end of the week or some shit like that. So just think, if I just would have bought, yeah, it was definitely Ethereum. Okay, so I'm gonna go back 5 years. Actually, I'm gonna go show it on here, because it's like a lot of times we do, whatever. I wasn't gonna really take it that long, but that whatever. I just can't help but to basically look at that, and a lot of times that you underestimate things, and it's like, whatever turns into you know a big deal. So it wasn't that far off. Okay, so I don't know. It might have. I don't really know. It seemed like it was. I don't know if it was necessarily Ethereum. Was it Ethereum? It definitely wasn't Dogecoin. I mean, it wasn't Dogecoin. It might have been Litecoin. Let me see. What was Litecoin at? Nah, it was not Litecoin. It was definitely Ethereum. But I started my gig at around this time, November 2016. So it was like $8.59. Even if it wasn't even 50 cent, it was $8.59. Okay. So here's a lot of times my thought, you know, whatever, $8.59. And then it even was lower than that in December. By December 2016, I already had at least one paycheck. I went and bought a subprime car. Okay, car loan, basically. 2005 Volvo XC90. Okay. Let's say I just kept my hoopty for a little while, like, and shout out to my cousin, because he gave me good advice. He said, man, don't do it. Okay. I didn't listen. I'm like, whatever. Instead of buying that car, okay, and I ain't gonna even talk about all of the car payments that I made, 'cause that makes it even worse. But let's just take let's just take $1,000 and then times it by this right here. Okay, and then there you have it, $393,000 within a couple years. But whatever. You know what I'm saying? So, it and I'm gonna look at this other company, and I'm gonna go back to the groups. So this is FET. I watch FET. It's I've been watching this company for a year and a half or so. So this is what kind of been like where I was uh I was like, okay, wow, I mean, the history on this company, I mean, you got quite a lot going on. I mean, it peaked up at like $23 back in 2017, but then, its lowest point was 15 cents a share, and that was this year. Okay, this is, I'm gonna go into my um yeah, I'm gonna go do that. So, stock profit calculator. Okay. So let's see here. Yeah, I like this one. I like Omni calculator. Okay, but it's actually other ones too. So okay, how much? 15 cents. See, this is what I'm talking about. This is see these not being able to hold stuff and all of that. That's why the buy and hold. You know what I'm saying. I have an actual meme. Actually, it says basically the market is for, I mean, basically profit is for people that have the patience enough to, basically, you know get the money from people that sell the stock or whatever, and then you buy more shares, and then you make more money from those people that sell their shares. And I know better because I've heard of many stories like that. One of my computer customers, back when I had a computer shop, he used to work for GE. And when GE went public, he actually, it wasn't GE, it was Nicor or something like that, ComEd or Nicor, so one of those. And he would basically, because he saw some of his coworkers um buy the shares, because the company would just give the workers shares for free for just being a worker. They had so many shares. They had millions upon millions of shares. They would just give every payday. The employees would get free shares. So the guys would, basically sell their shares to other guys that worked there that knew better, right? And thought more in the future. They would sell their physical shares, stock certificates, to the guys that were basically waiting for these guys to get their paycheck. They would actually physically hand them the stock certificates, and then they'll give them the money for it. And they'll, have extra beer money and whatever the case may be. And the guy, one of my, customers, former customers, he started to see them do it, and he started doing it. He started buying these certificates, okay, and he made quite a bit of money off of it. He said he made so much money that he paid for his daughter's college fund with that money. And this particular, you know, this is pandemic related, where this went to, like it said, $15 a share, and I mean, not $15, 15 cents a share, and it's at 51. It's literally reverse of its low to just today. And it's like, okay, I mean, I have way I ain't toot my horn, but I got way more money than I had in 2017, and I had even, or access to, whatever the case may be, in 2016. But I just, the impatience and all of that, whatever. You know what I'm saying? That mentality, it costs you money, costs you a lot of money. You know, it's just unbelievable how much money it costs you. So what I'm trying to say is that, I'm gonna go back to this oil groups or stock energy groups or whatever. When Finviz, I'm gonna look at the let's see here. So yeah, it's just, that's too much to look at. But so this is most of the groups here. So all of them have been down throughout the whole year. I said I was gonna look at REITs. So let me look at REITs in comparisons to oil. Yeah, the story of REITs and oil. Yeah, oil is that writer was definitely correct. Oil has hit the hardest, even harder than REITs, and REITs are really, really, really hit. Now the week and month performance is little action, but just did not jump out the window. Back to the electric, basically energy assets or car assets. It's definitely one of those. It's definitely one of those whatever situations, because the reason I mention that, because it has something to do with this. It has a little to do with it. It might, the percentage of what it has to do with it, I'm not sure, but it has something to do with it. Okay, definitely has something to do with it. We're gonna go, bump up, FinViz or whatever. We're gonna look into one particular company that, a lot of my, you know pretty, valued subscribers, we talk about this a lot, and this is one of those companies that went down, and then it's on a tear. It's probably called the Chinese Tesla. Okay, so this is another one of those whatever types of you know stocks, man, or companies that people miss out on. This is one of those. Now let me look at, because it's kind of, kind of complicated to look at with their chart, but you look at the 1 year mark. Eh, October 2000 last year, exactly this time. Whatever. $1.48. Eh, whatever. Now it's at $26. So I mean, it just goes without saying. I'm gonna plug. I said I was gonna plug in some numbers or whatever. I think I was gonna plug in. What was I talking about that I was gonna plug in numbers for stock calculators? Hey, what's going on, Soul Shader? So I um I think I was talking about FET, and then I was gonna plug in that because it was $15 a share, and it went from 15 to now 51. Okay, so we got with 15 cent, you should be able to buy. Eh, let's just say, because some of y'all got a lot of money. I'm gonna just put 10,000. Some of y'all got money, man. We're playing. Y'all don't give me none, but y'all got a lot of money, man. I ain't that much of a hole that you can't lend a helping hand, but we ain't got no commission like that. Nah, we ain't no commission. But ain't no buying commission. The fuck out of here with that shit. All right, so selling price is 51 cents. Get that goofy shit out of here, too. Everybody got to be Robin Hood, damn it. Or you ain't gonna have that many people investing in your brokerage account. I call that the Robin Hood effect. And Webull and all them other ones that was the first ones to adopt the no commission trading policy. So let's see here, net selling price, and then shout out to Soul Shader. I definitely have to jump on board with Charles Schwab because I definitely like trade OTCs. Okay, so should okay, so 10,000. It should automatically formulate, but let's see here. Why does it? Oh, net buying price. Yeah, it was 15 cent. How much net selling price? I mean, it should already give you that, but I guess yeah. So I sold it for 51 cent. Okay. All right. So ain't no seller's commission. Get that out of here. So you know what? Let's go with another stock calculator, man. Omni, you need to work on your shit, man. Let's see here. All right. Let's try this one. Bu- 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 10,000 shares. Price per share was 15 cent. Sell price per share was 51 cent. No commission. No commission. All right. Shares was purchased. It's okay. Okay. All right. It gives you so yeah, this is okay. Shout out to incalculators.com. Okay. Shout out to them. Let me put this in. Oops. Let me hold on. Dang. I jumped the gun. There we go. Oh, and it saved it too. Sweet. All right, let me put this in the chat. that in there. Go back to there. So yeah, let's see here. 10,000 shares. It was 1,500. That's not that much. 1,500. Okay. And then 15. Let's do the math. 1,500. 15,000 actually. Let's see. 10,000. So $5,000. I don't know what this is. I don't know why this is like. This is off. This is not right. I don't know what this is. I guess this is price per share $15. Sales should purchase at 37.50. What is they talking about? That's not right. It's 1,500. Where's they? Do I have to put something here? Nah, this is off. Damn, I shouted them out, man. They got they calculator. Shit, they whoever programmed they site, man, they fucked up. That is not right. That is not right math. And I'm not the best person. I'm not the best person when it comes to math, but goddamn me. It's a simple calculation. Basically, shit. Fuck it. It's 1,500 to buy 10,000 shares. You'd have made $5,100 profit. Goddamn, man. I gotta make me a. That's all. You know what that makes me do? Like, and that's what I'm in the process of doing to make some calculations, like make like some stock calculators. That's definitely important. Um, I'm actually gonna let me let me let me let me see. I got a probably disregard that link. Say I just bought 1K worth of Lyft stock today. So now I have got 150. Oh, that's pretty good price point. Got another 50 shares. They're moving on. I'm gonna get another 50 shares. They're moving on to Alibaba. Yeah, that's what's up. That is what's up. So yeah, let me close this out with basically I like I said before, oil, something's got to do with something is to do with electric. But the demand is low also because people are not, you know, going to the office. I'm in my office right now. My company I support, not even 25% capacity that it normally should be. So people are still working remote. I've heard people saying that companies are gonna probably this might be the new trend for years to come. So that is why the demand is low. Okay. But you gotta think, I'm gonna give you a hint. People will slowly but surely have to go to the office. They're gonna return more people to the office. I don't know when, but slowly, that's where things are gonna go. Can't do everything from home. I can't fix a computer from home. Okay, not right now. And then when they get the drones that deliver stuff like really, really quick and all that type of stuff, yeah. But they ain't that far ahead in the future. You know what I'm saying? So it's something to that effect, more or less, that people are working from home more and are still working remote. That is why. That's the biggest reason why that demand I ain't gonna go into other stuff, but that's the biggest reason why the demand is low. What are people doing? What are the modern worker doing now? He's working, she's working remote. A lot of people still, and then we gotta also. I'll give one more. I'll give one more. Basically, unemployment rate. U.S. unemployment rate, and then pretty much rule of thumb, whatever the current employment rate is, you just add about 10 to 20% to it. You know, whatever the freaking unemployment rate is, you add a percentage to it, like 10%, 15, 20% to get the true unemployment rate, because you got a lot of people that they don't count. And you notice how it's like very difficult, man, to get figures on freaking unemployment rate. That's a huge impact. Okay, so it's saying 7.9%. So I mean, you could just say the true unemployment rate is probably like 20%. So you got a lot of people that's also unemployed. They ain't got nowhere to go. Even they remote workers by default. They remote is actually flicking the channels on their remote on their TV. So that's another impact. You add those two together, that's why oil is down. So I pretty much dog walked you into where you got to look where oil probably will spike. Unemployment rate drops, and then more people going back to the office give more confidence with being able to return back to work. And I'm gonna try to work on my whatever. I mean, at least I pointed it out. I pointed it out that that's one of the things about me. I try to work on myself by pointing out my flaws, but my flaws are millions of people's flaws. Okay, hundreds of millions of people. How many people missed out on Bitcoin? Come on, please. How many people miss out, man? Most people don't even either are not in the markets, and by the time they're in the market, it's way too late. Like, I mean, so it's not like I feel really that bad about it, but yeah, I definitely need to stop the whatever type of mentality. And then I suggest that's I think that's like the homework from this whole lesson. I mean, the small tangible things do matter. They do matter, definitely. Small stuff does matter. And then when you're looking at oil, those are the three things to close it out: electric, carbon, unemployment, and people remote employees that don't even have to go to the office, and their children are at home, so they didn't even have to go drop the children off at school. You know, that's it. This is Market Mondays. This is Bro Genius out.